Global sentiment upbeat as earnings season begins. Following choppy trading, Wall Street indexes dipped ahead of the closing bell on Tuesday, as investors preferred to take some profit ahead of major events. The S&P 500 slipped 0.24%, the Dow Jones dropped 0.34%, and the Nasdaq slipped 0.14%. Investors were cautiously weighting U.S. inflation data and the FOMC meeting minutes. On the other hand, upbeat expectations ahead of earnings season capped losses in the market. Asian equities were mixed on Wednesday. In China, the Shanghai Composite gained 0.42% after a report showed that exports beat expectations, while growth in imports disappointed last month. Meanwhile, China's trade surplus with the U.S. rose to a monthly record of $42 billion. Meanwhile, Tokyo's Nikkei 225 index fell 0.32%, and the S&P ASX 200 in Australia shed 0.11%. Hong Kong was closed for a holiday. In Europe, equities opened marginally lower today before turning positive. Regional stocks posted gains eventually, with the Pan-European Stock 600 index climbing 0.7% due to strong earnings. In individual stocks, LVMH announced upbeat earnings for the third quarter, with 40% organic revenue growth across its brands compared to last year. The French luxury giant said its fashion and leather goods division, which accounts for nearly half of the group's sales, grew 24% during the period. The division recorded organic revenue growth of 57% for the first 9 months of 2021. Overall, like-for-like sales rose by 20% to 15.51 billion euros, in line with expectations, and 11% higher than in the third quarter of 2019. LVMH stocks gained over 3% on Wednesday. On the data front, UK GDP was 6.9% higher in August than the same period reported last year, slightly higher than the 6.7% expected. In the US, the Consumer Price Index jumped 0.4% in September from the month prior and 5.4% year over year, against expectations of 0.3% monthly and 5.3% annually. Meanwhile, the Fed released its minutes of the September monetary policy meeting. Fed officials agreed at the last meeting that if the economy continued to improve, they could start reducing monthly bond purchases as soon as next month and bring them to an end by mid-2022. Some policymakers stressed that economic conditions were likely to justify keeping the rate at or near its lower bound over the next couple of years. Participants also noted that uncertainty remained high. Following the events, the S&P 500 rose 0.3%, the Dow ended flat, and the tech-heavy Nasdaq gained 0.73%. In individual stocks, Delta Airlines slid nearly 6% for the biggest drop in the S&P 500 after warning that rising fuel prices will challenge its ability to remain profitable. The company also forecasts higher labor costs. JP Morgan Chase posted much stronger than expected third quarter earnings. Earnings for the first 3 months ending in September were pegged at $11.7 billion, or $3.74 per share, up 28.1% from the same period last year. Quarterly average loans were up 5% from last year as activity rebounded from post-pandemic lows. However, the bank stocks finished 2.6% lower overnight. Asian stocks were mostly higher on Thursday as markets in Hong Kong were closed for a holiday. The Shanghai Composite Index was little changed after the report pointed to a surge in producer price inflation, which rose to a record 10.7% over a year earlier in September from 9.5% in August. Japan's benchmark Nikkei 225 added 1.4%, South Korea's Kospi jumped 1.34%, Hong Kong's trading was closed for a holiday. Meanwhile, the dollar gained in a knee-jerk reaction to the FOMC meeting minutes before turning lower across the board. Against this backdrop, the Euro-USD rallied to 1.1600 handle, retaining a bullish bias early on Thursday. The pound-sterling-USD pair registered October highs to retarget the 1.3700 figure as dollar demand had eased. Oil prices stay afloat to settle slightly off 3-year highs above the $84 handle. The API report showed that overnight, U.S. crude stockpiles rose by 5.2 million barrels for the week ending October 8th. On the positive side, gasoline inventories fell by 4.6 million barrels and distillate stocks fell by 2.7 million barrels. Meanwhile, the U.S. Energy Information Administration said that the crude oil output in the U.S. is going to decline in 2021 more than previously forecast. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.